Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that buyers were active off of the support at 60.5 and the recent lows at 62.5 and 63.5, and were dominant in the overnight session, pushing ES all the way up to 85.5. At this point, heading into the open, we know that the buy side is in firm control, but at the same time, the markets are at a short-term inflection point. So from here on out, we have to gauge and see whether there is sufficient strength in the market to break out above the 83.5 to 85.5 zone for a test of these upper resistance zones at 88.75 to 90.75, 93.25, and finally 97.5 to 2000. So the buy side is in control, but we are at this point where it's kind of a make it or break it point for the S&P here. So off the open, keep an eye on yesterday's high, 82.25, 83.5, 85.5 is still short-term resistance, but given how bullish the overnight session has been, if we continue balancing near the highs here and we are seeing strength across the board in the broader market and the momentum is quite positive, then we can get a breakout above 83.5 to 85.5 for a move higher. Now we've already seen a pretty decent overnight range, so if the volume is not really there, then the upside could be fairly limited. That's something that we'll have to gauge in real time to see whether there is enough range potential to push ES all the way up to 97.5 to 2000, and if there's enough momentum to really take it up there, because as we go higher, we can still see profit taking at these resistance zones. But right now, the way the market structure is set up, we can see that there is a 3-day balance established within this range. And if we get a breakout on strong momentum, then that would mark a 3-day balance breakout, and it can have some strength behind it to push the market higher. And 97.5 to 2000 is a possibility if the volume is decent and the momentum is really there and present and sustained in the market. Now, in the event of a failure at 83.5 to 85.5, then we're simply stuck in balance, right? Then this entire range over here comes back into play, and we can still get responsive buyers active on pullbacks into support. Now, the first support area on the downside is 75.5 to 77.5, and this is the most aggressive area of support, and it doesn't necessarily mean that it's a spot where you have to initiate a long. It only makes sense to enter long there if the underlying environment is still quite strong and the probability of a breakout is still relatively high. So what I mean by that is that if you get a strong rejection off of 83.5 to 85.5 and there's really no momentum to the upside, then 75.5 to 77.5 is really better served as a reference area to determine whether the market is still strong or weak, not necessarily a action point where you have to buy the market. So 75.5 to 77.5 is really the aggressive spot. It is the immediate support underneath, and it only makes sense to buy there if we are seeing signs that are supporting the idea of an upside breakout. And the issue with that zone is that if we are going to get an upside breakout, then we may not even pull back to 75.5 to 77.5. The primary support on the day where responsive buyers can be active just based on trade location is 71 to 73.5. You have the prior VPOC over there. You also have the high volume node of the current 3-day balance at 72.5. So there's some confluence, and that's an area where the buyers can defend. Below that, 67 to 68.5 is the overnight breakout area, and it also marks the previous close, the gap fill. And then finally, 60.5 to 63 marks the bottom of this recent 3-day balance, and that's really the final spot where buyers can defend. And if that zone doesn't hold, then you can actually break below the balance and get short-term long liquidation. So, at this point in time, that zone is not really in play. There's our other zones, of course, in the middle that we have to deal with, and the primary zone that we are concerned with is 71 to 73.5. If this market is going to break out to the upside, then we want to see ES holding ideally above 71 to 73.5. But again, if this market is really strong, then it may not even pull back to 71 to 73 half. So right now it is a more challenging context in the sense that the market's already opening up on a fairly decent gap. We have already seen a pretty decent range in the overnight session, which if the volume doesn't really pick up, can limit the range potential of the day. So there are these challenges to work with, and it's not really the easiest environment to trade, simply because it's already opening on a fairly high value here, fairly high price. So, be a little more conservative with the execution. If there is a lack of clarity, if the market opens and there's not a whole lot of momentum, and things are a bit unclear whether the breakout is likely or not, then it's better to sit back and wait for clarity rather than getting involved while there's too much uncertainty, and then you're not going to have the conviction to really see that trade through, right? So whatever you trade you decide to put on, make sure that at least you have some level of conviction behind the trade that you will see it through. So if you put the trade on, then see it through. Otherwise, wait and allow the market to give you some more information to get a little bit more clarity on the situation that we're in. So right now, it's really a question of whether there is enough strength in the market to put in a upside breakout. Simply a lack of strength at these prices up here at 83 half to 85 half can cause a pullback, right? So it's not that we have to see outright weakness to get a pullback. We simply have to see a lack of strength, because right now the onus is on the buyers, right? We are opening near the balance area high, and it's really the buy side that has to prove that yes, there is enough strength to go higher. And simply a lack of strength or a lack of upside momentum can lead to a pullback to 75 half to 77 half quite easily, and even 71 to 73 half, which is really the primary inflection point on the day time frame right now. So those are the main ideas. That is the environment that we are trading in. Let's see the type of momentum we see off the open. Let's keep an eye on the other markets as well. They're also at their respective short-term inflection points. So let's see if we get some pickup in the TF. So far, that's the market that has been relatively weaker to the others, but it's also trading near the short-term balance area high here, the 3-day balance high. So everything is kind of at that inflection point where it's kind of a make it or break it spot. Either we break out here, or if we fail, then we're still in balance and we can come all the way back down, or at least come down to 71 to 73 half. So those are our main thoughts. Let's see if the buyers show up off the open, and we'll take it from there.